Good day, grade 12 learners. Welcome to today's mathematical literacy lesson. My name is Mitala Chia. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. Grade 12 learners, I know it's been hectic for you. We are now facing the last push. This is our last push to prepare you to write the finals. We are just going to remind you of what you have learned from the beginning of the year up to now. Because remember, in September, you wrote your paper 1, whereby the topics for paper 1 were finance, data handling, and probability. So for today's lesson, our main focus will be doing what? Finance, but under finance, we'll be focusing on the UIF and also the income and tax. Grade 12 learners, boys and girls, by the end of this lesson, you should be able to do the following. Work with payslip in order to understand. You will be working with the payslip in order to understand the net pay. What is the net pay? The gross pay and the UIF deductions. So basically on our payslip, we'll be focusing when you get your payslip, as an adult or when you are writing your exams, remember you'll be given an example of a payslip whereby you'll have to interpret it. Sometimes the examiner will give you the payslip, or they will just give you an information that you need to interpret. But when you get your payslip, you need to know the following. What is the net pay? How do you identify the net pay? How do you identify the cross pay and also the UIF deductions? We'll also be focusing on calculating the UIF. How do we calculate the UIF? And then the next one, it is calculating the taxable income. Calculating the taxable income. So that means the first step, we need to be able to read the payslip. After reading the payslip, you will be able to identify the UIF and how to calculate it, and then calculating the taxable income from the given information, and also use the tax tables to calculate income tax for individuals. Remember now, in South Africa, every business in South Africa has to pay tax. And where do we pay tax? We contribute for tax towards SARS, which is South African Revenue Services, but we'll come to that. And then also, before the end of this lesson, we'll be also focusing on what? On calculating the medical aid tax credit. So that means you should be able to calculate the UIF. After calculating the UIF, you should be able to calculate the taxable income. From the taxable income, we use the tax tables to calculate the income tax for individuals. From there, we go on, we calculate the medical aid tax credit. Then the last step, now we determine the relevant tax rebates. So, boys and girls, it's not for the first time you are seeing these words or this information, our objectives for today's lesson. Your teacher has been doing this in class from term 1. And remember, we did it again during the SIP classes that we had. Those who did not have any secondary school improvement intervention programs, if they did not have those secondary school improvement program or intervention program, then you know that your teacher will give you the material. You can go through this material, even this one, even the previous slides, because we've been doing this taxation previously with the UIF. Now, there are terminologies that you need to be aware of when you are doing tax or taxation. Finance terminology. What are those terminologies that you need to know? Right here, I've got a number of terminologies that we are using in finance, and definitely your teacher gave you these terminologies. Every now and then when you do the finance in class, the teacher always refers to this terminology. They use these terminologies. But for this relevant topic that you are doing today, the UIF and taxable income or taxation, we'll be focusing on the highlighted ones. Remember, we said we should be able to do what? The gross income. We should be able to identify from the payslip the gross income, how to calculate the gross income if not given, and then the net pay, the payee, the pay slip. You need to know what is a pay slip. You need to know the salary. We need to know the tax, and then we need to know the taxable income, your UIF, and your VAT. These are the most important terminologies that we are going to focus on when we do this topic. As you can see, we have different terminologies, like in finance that you are using. Your account, you need to know what is an account. Remember, an account, we have the municipality account, we have the personal account, different types of accounts. And then we also have the balance. When you get say, for example, you get your account, your slip, or maybe let me say your clothing account, they send you their invoice to say, now this is what you owe us. And then when you get that, you say, okay, this is my account from example Truworths, and then now on this document that I'm having, then I will be able to identify, okay, my account number. This is my account. How do you identify that it is my account? Then I have my personal account number, and then I'll be able to check the balance. Even if it's on a bank statement, I will also be able to check, okay, on my bank statement, what do I owe the bank that I'm banking with? If I'm banking with Standard Bank, okay, it will be a document from Standard Bank, and then also it will be showing all my transactions that I have performed in that account. And then the break even, we have done that. The budget, the capital, when you talk about the capital in terms of the budget, remember the capital is the amount that you have before you can even use it. That is the capital, the amount that you have in your budget. So it's a capital that you can use. And then you have the compound interest, the cost effective, the cost price, the cost rate. These are just the terminologies that we are using in finance. But I know your teacher has given you the correct terminologies. They've given you the glossary of terms that you can go through. And grade 12, boys and girls, you need to know these terminologies. You need to know exactly what is the meaning, because remember, these terminologies, they are examinable. They can be asked in the exam. For example, the gross income, like I said, when you get your pay slip, the gross income, you need to be able to identify the gross income. What is this gross income? And we say usually the gross income, it is the amount of money that you get from your employer before any deductions. So usually we say it is the paper money, because now remember, it will be reflected where? On your salary slip or on your pay slip. It will be reflected there, that amount, that gross income. So it means it is the income that you get before you can even pay the tax, before you can do any contributions, your UIF, your pay as you earn, before the medical aid, if you have the investments, if you are paying the home loan policies or the retirement annuity fund, before all that can be deducted, you have what we call the gross income. And then when it comes to the net pay, it will be the amount of money that you get after deductions. That means after they have deducted your pension fund, after they have deducted your retirement annuity, if you have one, after they've deducted your medical aid contributions. Remember those ones, some people, they pay through what? EFT, through their bank. Some, they deduct that amount, the medical aid contribution, from their salary, so directly from their employer. So when the money comes to them, they know that everything has been deducted. They are only left with what? With the net pay. So it means the net pay, it is the amount of money that you get after what? After the deductions. And then we also have the pay as you earn. Pay as you earn is the payee. We usually call it a payee. It is the amount of tax that you pay by the end of the year. So always that amount, it is reflected as the payee. When you get your IRP5, you'll see that it indicates that it is the payee. That means it is the contribution that you have been doing on a monthly basis. But remember, when we talk about taxation, we are focusing on the annual salary, not on a monthly salary. But we'll get to that point when we go to the tax tables, when we talk about the tax tables. But remember, the payee, it is always there on the salary. So it is the amount of tax that you pay on a monthly basis. And then we have the pay slip. Pay slip, it is the document that reflects the amount of money that you are earning. Some, they get the pay slip by the end of the month, or some, they get the weekly one. Remember now, we have different pay slips or different terms for the salary. So when you get paid on a weekly basis, we say it's a wage. it's wages, but on a monthly basis, it is a pay slip. So you get that document that reflects all the deductions that have been made in your account. The amount of money that you get, your gross salary will be indicated there on the salaries, on the pay slip. It will be indicated there that this is the amount that you get as a gross income, and then from there, these are the deductions that are being taken throughout your gross income. From your gross income, they'll be subtracting number one, your UIF, your payee. They'll be subtracting your UIF if you're contributing towards UIF. Remember now, it's very important that you contribute. If you are not a member of, if you are a member of Gauteng or maybe government, then they contribute towards GEPF. That's where the money goes, because now that money, it is the one that you'll get when you retire. And then we also have what we call the salary. Remember now, the salary is the amount, is the money that you get. The salary that is being paid by the employer. It is the salary. The amount, some, like I say, with the salary, some they call it, they get it on a weekly basis. We say it's a wage, but on a monthly basis, it's a salary. And then you also have a tax. Tax, remember what I said, each and every single person in the country, even the companies, the big companies, the shops, it can be the shops, it can be the company, your Vodacom, or anyone in South Africa who earns a salary is eligible to pay tax. Whether you earn a little money, but remember, you are eligible to pay tax. If you own a business, you are also eligible to pay tax. Everyone is paying tax in the country. And then we have also the taxable income. When we talk about the taxable income, it is the income that we use to determine your payee. It means it is the income that we use, the taxable income. It is the amount of money that we use to determine how much tax are you supposed to pay, or whether you qualify to pay tax or not, using what a threshold. Remember, a threshold, it indicates, it is a scale that they are using to check if you qualify to pay tax or not. So a taxable income, we usually take the monthly income and then we multiply it by 12 to get the taxable income. And then we also have the UIF. UIF, Unemployment Insurance Fund. That fund, it assists people if they become unemployed. Remember, it's some sort of a relief to say, because you are still looking for a job, then let us relieve you from that stress, and then you will earn the amount of money that you have been, a portion of the salary that you have been contributing towards the UIF. It means they've been saving it for you so that when you become unemployed, at least while you are still searching for work, and then you are able to have some means of living through the UIF. And then the value added tax, everyone knows that value added tax, like I said to you, when you go to your shop, right, or any clothing or shop that you buy items, we pay tax there. And those companies, those businesses, they also pay tax towards what? Towards SARS. So each and every single item, or each and every single business or salary or whatever that we do in South Africa, it is being taxed. So we know that tax is very important. And then in terms of what we buy at the store, we buy items that are value added tax. That's how our country also makes the revenue. That's where they get the money that they're using for you to go to the doctor, to the clinic for free. They're using that money that you have contributed towards SARS through what? Through tax. So boys and girls, I hope you still remember this, the income that we spoke about, the gross income, the net pay, the payee, the pay slip, the salary, the tax, the taxable income, the UIF, and the VAT. And if I may go back again to the taxable income, remember the taxable income, it is the income that you get after deductions, which deductions the UIF, if you are contributing towards UIF, it has been subtracted. The non-taxable, non-tax deductibles, they've been deducted from the annual income. So that means they calculate your annual income, they take your monthly salary, they multiply it by 12. After multiplying it by 12, then they say, okay, fine, the UIF now, but we'll come to that part of the UIF, whereby we say UIF, Unemployment Insurance Fund, you are contributing 1% as an employer, and the employee also contributes 1%. So altogether, it is 2% that goes to the Unemployment Insurance Fund. So the total percent that goes to the fund, it is 2%. But as an employee, you get only what? You only get to pay 1%, and the employer also pays 1%. So the taxable income, then if you are contributing towards UIF, then it will be deducted. If you are contributing towards a retirement annuity fund, it will be deducted from where? From the taxable income. From the annual, not the taxable income, from the tax, from the annual salary. Remember, the taxable income, it is the income that we use to calculate the tax that you are supposed to pay, which is the tax payable. We use the taxable income after all deductions have been made, but we'll come to that. Don't forget about that. And I know you know this, it's not for the first time you are seeing it. Let's go directly to the UIF. What is the UIF? We said the UIF, it is Unemployment Insurance Fund. Unemployment Insurance Fund. It is calculated at 1% of what? Of the basic salary. So when you get your pay slip, remember we spoke about the pay slip, that it indicates everything that is being deducted from your salary, from your gross income. So when you get that, it will show, okay, fine, this person is contributing towards UIF. And how much is their contribution? It is 1% of what? Of the basic salary. And then it exists to do what? This UIF, why does it exist? Why is it important that we contribute towards UIF? It exists to provide a short-term relief to workers when they become unemployed. Remember, during the COVID-19, during the 2020 and 2021, quite a number of people lost their jobs. Many factories closed down because of the pandemic. So now, these people, how were they being assisted? They were assisted through what? Through the contributions that they've been making towards the UIF. So they were able to make some means of living by going to the labor department, and then they, remember, they've registered, they've been contributing at their workplace. So now they go there and then they claim the UIF. So for a period, a certain period that they've agreed upon, maybe 6 months, it depends on the amount of money that they've been making and then that they've been putting away, or the period that they have worked for. So they will get the money on a monthly basis, a portion of that contribution that they've been making for a period of 6 months. It depends on how long they have worked for. So, but remember, we said it is a short-term relief. That is why I'm saying maybe for a period of 6 months, because it is a short-term relief while you're still searching for work. Then you will be able to live while you are still searching. So it's not like you won't have money at all. That is why it's very important that when you work, you contribute towards the UIF. And also, it exists, UIF, it exists to be during when you are unable to work because of the maternity leave or adoption leave or illness. Remember, as women, we have to go on maternity leave. You give birth, you can't give birth today and then tomorrow you are back at work. You still need to stay at home for a period of 4 to 6 months. It depends on the employer. So you stay at home for that period, and while you are at home, remember now you have been contributing, then that is the money that you'll be earning. So that means you'll go to the Labor Department and there you claim your UIF for the maternity leave. So for the period that you are being at home raising your baby, the baby who has just born, and then you'll be able to buy some goodies for yourself and clothes for your baby. So during that period of the maternity leave, then you are able to get the money. The adoption leave, there are those people who don't have kids, so they adopt. Or some, they have kids, but you know what? Because they can see these kids, they don't have anyone in their lives. They don't have anyone to support them. So then they decide to adopt. Some, they lose their parents. And if you have lost a parent, you need someone to take care of. So you get adopted. Some, they are being left at the hospital, so they get adopted. So for the adoption leave also, so that you are able to bond with the child, and then you get to claim at the UIF, at the Labor Department for UIF for the period that you'll be at home while you are bonding with your child. Or you become ill, temporarily ill for a certain period, so you are unable to go to work. Then that's where the UIF plays an important role, because you'll go there and claim while you are still ill that you get a salary. Because remember now, you need to live even if you are ill. It's not like when you are ill you are dead. No, you are still alive. So it's very important that you contribute. So boys and girls, I hope you now notice that the UIF, it is calculated at 1% of the basic salary. So let's continue. I hope you are still with me. Let's continue. Let us have a look at the payslip now. Remember, we spoke about the payslip. I said it is a document that indicates your name. Here, as we can see, it says it is the company name. It is a high-rise bakery. That is the company name. And then the date of the salary, it is the 20th, or the pay date, it is the 25th of March 2020. And then who's the employee name? It's Solly van Heerden. And then the occupation of Solly, so it means Solly works for who? Solly works for High Rise Bakery. And then occupation, it is specialist baker. And then his ID number, all this information, the name, the employee name, the occupation, the ID number, the address, Solly's address, the bank account number where the salary will be paid into, and then the tax number. If they're paying tax, remember, each and everyone is registered. Who is working is registered at South African Revenue Service. So we have the tax numbers. And then from there, what we have also that is being indicated on what? On the pay slip, we have the income. As you can see here, it is our basic income. How much is Solly earning on a monthly basis? As a basic income, it is 18,090 rands. 18,090 rands. As you can see, it says basic salary, and then this basic salary, it's similar to what? To the gross income. That basic salary is similar to the gross income. So it means the basic salary is exactly similar to the gross income. So Solly's gross income, it is also 18,090 rand. And then now deductions. What is being deducted from Solly's salary? It is the income tax. He is paying 2,443 rand and 79. That is what he is paying towards his tax. And then his medical aid, it's 772 rand. And then the pension fund, it is 415. Now, we need to complete here. It says number A, we need to calculate. It says question 1, study Solly's pay slip provided alongside and use it to find the missing value A, B, and C. We are looking for A, B, and C. Now, when we have a look at A, what is our A? Our A, it is what? UIF. And then we said UIF. It's calculated as what? As 1% of what? 1% of basic salary. So it means Soli will be contributing 1% of his basic salary. And then how do we calculate that 1%? It will be 1/100 multiply, what is his basic salary? We said his basic salary, it's 18,090 rand. And then remember, boys and girls, you need to show all your working calculations. Now, take your calculators, calculate for me how much is the 1% of Soli's basic salary, which we said it is 18,090. Let's see, let's confirm. It will be 1 divided by 100. I know those clever learners, they are quick to say 1 divided by 100. They can use 0,001. It's the same. You multiply it by what? By 18,090 rands. And then they get the amount to be 180 rand 90 cents. Remember, boys and girls, in your calculator, it will only show 180,9. And we know that after 9, there is a 0 because it is monetary. We don't just write it as 180,9, but we write it as 180, or 180 rand 90 cent. We include the 0 because it is monetary. You don't just leave it as 9, but you include the 0 at the end. This is the 1%. Boys and girls, it is very important. These are the marks that you can collect in the exams. These questions, the UIF, it is taxable. It is examinable. So the examiner can ask you to calculate the UIF from the basic salary, or they will just give you a salary slip. You should be able to identify the basic salary and you should be able to calculate the UIF. Remember now, this is just a 1% that Soli is contributing towards the fund as an employee, and then the employer will also contribute the 1%. So it means towards the fund, if they ask you how much does Soli contribute in total towards the fund, including the one of the employer, then it will be 180 times 2. 180 rand 90 cent. You just multiply it by 2, and then in total, remember, because it's 1% from Soli as employee and 1% from the employer, and then in total, now if we multiply it by 2, in total they will be paying, Soli will be contributing, or the employer will be paying, will be contributing the 361 rand 80 cent towards what? Towards the UIF. So it means towards the UIF, or towards the unemployment insurance fund, towards the fund, the employer will be paying 361 rand 80 cent towards the fund. But solely only on his part, he is only paying how much? 180 rand 90 cent. So don't forget, boys and girls, you must go through this question and you check what is being asked. Okay, in this instance, they said, well, how much is Soli contributing? So the value of A here from the contribution, it is 180 rand 90 cent. And then now the value of B. Now let's see. B, it says total deductions. Remember what I said about the salary slip. I said the pay slip it is the document that shows all the deductions that have been made in your account. So now we want to know the total deduction, what is being deducted now. How do we calculate the deductions? As you can see, we said out of the deductions, we have the income tax, that is 2,443.79. We start by punching in those amounts. So you add these amounts because it is deductions. You add all these amounts and then they will give us the value of B. So if I may quickly do it and say B is equals to 2,443.79 plus the 772 rand of medical aid plus the 415 rand of what? Of pension plus the 180 rand 90 cent, and then in total now how much are we having? Remember, now we are calculating the total deductions, and then we start by adding. I hope you have your calculators with you. You are doing the same thing that I'm doing. We are adding. Let's add together 2,443 rand 79. We add 772 rand, and then we add the 415 rands. We add 180 rand 90 cent, and then the total there, it gave us 3,811 rand 69. 3,811 rand 69. So that is the total deduction. So we have to write it here. Remember, we have to include the symbol rand because now here we are talking about monetary and it is in rands. You have to include the rands. Then it is 3,811 rand 69. And then now let's see the net pay. Remember what I said to you. I said the gross income, it is the money that you earn before any deductions. So it is this money that you earn on a paper. As you can see, it's on a paper, on a salary, on a pay slip. It is there as your gross income. This is what Solly is getting from who? From his employer. Who is his employer? High Rise Bakery. So the employer Solly's employer is who? It is High Rise Bakery. And then his occupation, we said, is a specialist baker. So now, if you check the employer, it's High Rise Bakery, and then the employer pays Solly how much? He pays Solly 18,090 rands. Now, Solly has got some deductions that are there in his salary slip. And what are those deductions? It is the income tax that he needs to pay. They are deducting the income tax, they're deducting the medical aid, they're deducting the pension fund, they're deducting the UIF. So we add all those three, and then after adding them, we get the deductions to be 3,811 rand 69. Now the net pay. The net pay, I usually say it is the take-home salary. This net pay, it is the amount of money that is left after deductions have been taken out. So now let's see for the net pay, which is C. How do we get our net pay? We say net pay, it is 18,000, which is the gross income. The 18,090 rands. We subtract what now? We subtract the deductions. How much are Solly's deductions? Here are the deductions. Let me just do this so that you can see the deductions. Now we said it is 3,000. 811 rand 69. And then now the net pay. The net pay will be 18,090 rand subtract 3,811 rand 69, and then we get the amount to be 14,278 rand 31. This is now what Solly takes home. This is what you call the net pay. So it means Solly is taking home. This is the amount that will be deposited where? This amount, let me just write it here first. It is 14,278 rand 31. So this amount now, it will be deposited where? Into Solly's account. That is why we say it is a take-home money now. The net pay, it is the take-home money. That is what now Solly is taking home. That is what it will. That is what will be deposited into Solly's account. So now, if we check, boys and girls, this is where you need to collect the marks if you get this type of a question in the exam, as it is examinable. So it's very simple. You go through the salary slip or the pay slip, you go through it. What do you check? The pay date, is it there? Yes, the pay date is there, it's being indicated. The ID number of the employee, and who's the employee? It's Solly. And what is his occupation? It's specialist baker. And then his address, that's where he stays. The bank account number where his net pay or where his salary will be paid into. That is his bank account. And then he's also contributing towards SARS, he's paying tax, and that is his tax number. And then how much does he earn? We go there and then we say this is what Solly earns. Solly earns a basic salary of what? Of 18,090 rands, and then that basic salary is the same as what? As the gross income, which is 18,090 rands. This is on a monthly basis, and then the deductions that are taking place in his account or in his salary, this is what the money that is being taken out of his salary. He is contributing, he's paying tax, and towards tax he's paying how much? 2,443, and then medical aid is paying 772 rand. For pension fund, he's paying 415, and then for UIF, because we have calculated UIF, we said UIF, it is 1% of the basic salary. So how much is that 1% of the basic salary? This is how we have calculated the 1%. We said UIF, it is 1%. That means here it is we say it is 1%, which is 1 over 100 multiplied by the basic salary, which is 18,090 rand, and then we got the amount to be 180 rand 90 cent. So this is what Solly is contributing. But remember what I said, if you can see here, I have enclosed this information inside the circle. I said, now if they can ask you how much is the employer contributing towards the fund, towards the unemployment insurance fund, which is the UIF, then the employer will be taking Solly's portion, which is 1%, plus his portion, plus the employer's portion, the employee's portion, which is 1%. All in all, it means it will be 180 rand, 90 times 2, and then in total will be 361 rand 80 cent. For example, if they can ask you only to show how was the 361 rand 80 cent came about, then you just say, okay, fine, UIF by the employer, we'll say it is 2% of what? Of the basic salary. 2% of the basic salary, and then you say 2 over 100 multiplied by the basic salary, which is 18,090 rand, and then you should be getting the same amount of 361.80. So boys and girls, these are the marks, easy marks that you can collect. You don't need to stress, but you need to be able to interpret this pay slip. Let's move on, boys and girls. Remember what I said about the income tax. We said income tax is charged on your annual income. Always, income tax is based on the annual income. It's based on the tax rate tables issued by SARS. Who is SARS? SARS is South African Revenue Services. Don't forget the acronym SARS. It stands for South African Revenue Services. And then now we say income tax is charged. It is charged on your annual salary. If I can quickly take you back to the previous slide, from Soli's salary slip, pay slip, we said Soli is getting how much per month? He is getting a basic salary of 18,090 rands. So if we're to calculate Soli's annual income, we have to take that basic salary because it is on a monthly basis. Remember the date there, it was 25th of March. And then we'll take that 18,090 rands, we multiply it by 12. Let me quickly do it. It's 18,090 rand. We multiply it by 12. So if we multiply it by 12, that means on an annual basis, Soli's annual income, it is 217,080 rand. Remember now, on this annual income, I've never mentioned anything about the 13th check or the bonus. I am only talking about the annual salary. If it is mentioned that Soli receives a 13th check or a bonus, then you will multiply by what? By 13. But if it's not indicated, we only calculate the annual income based on what? Of the monthly income based on the 12 months. Because now, remember, when we calculate the income tax, we are focusing on the annual salary, and our annual year, we know annual, it is 12 months. Our salary is for 12 months, excluding the what? The bonus. If there is a bonus, it will be 13 months. But we know that there is no a year that ends on the 13th month. Our year ends on 12 months. Even if I can start working during March, my year will end when? March. It won't just end by December because we say it is in 2020, but I will turn 1 year when during March, on the day that I was employed. So now we say annual income, it is on 12 months, and then say income tax is charged on your annual income based on the tax rate tables issued by SARS. Taxable income. Now, the taxable income is a portion of your income that is taxed. A portion of your income that is taxed. And then it is calculated by taking your gross income. Remember, we calculated Soli's gross income. We identified, it was given to us on the payslip. We identified Soli's gross income. And then we do what? We subtract any non-taxable deductions. What are those non-taxable deductions? I said it is pension fund, retirement annuity fund, UIF, and donations. Boys and girls, pension fund, we know it's 7.5% of the basic. Retirement annuity, it is the amount of money that I am saving for myself towards what? Towards retirement. It is non-taxable. And then we have the UIF. it is also non-taxable. And then we have donations. What are these donations? If I am donating money towards the NGO or towards a charity, then that money, it is non-taxable. That amount that I am contributing towards the charity, it is non-taxable. Remember, the UIF, remember I say it's a portion, that it's an amount of money that I'm saving for myself. Should I become unemployed, I know I am covered by what? By UIF. Should I become unemployed or should I fall sick temporarily, stay at home, then UIF takes the cover. And then the donations, remember the NGOs, the charity organizations, I donate a portion to them. So if I am donating to the charity, they can't expect me to pay a tax for that amount because I am giving it away. So it is non-taxable. And then the retirement annuity fund, like the word says, retirement, RAF. So when I retire, when I now say I am done, I have serviced well, and then I want to go and rest at home, then I've been contributing towards retirement annuity fund, then I will be able to access that money that I've been putting away on a monthly basis during the period while I was working. And then the pension fund also, it is the amount of money that I'm also putting away. Remember the pension fund, it's for me when I go to pension, and then retirement, it top up on the pension fund, on the money that I've been putting away. Remember, different people have different lifestyles. So if you're used to that high lifestyle, you'll need to have money to maintain such type of lifestyle. So you'll need to put money away while you are still working, so that when you now retire, when you go on pension, now you're able to continue living the life that you have been living. And then now we have a taxable income, the formula now that you are using to determine or to calculate the taxable income. We said it is the gross income minus the non-taxable deductions. The gross income minus the non-taxable deductions. So if we can go back to Soli's salary, I don't think, they've never mentioned anything about the donations, but they only spoke about what the pension fund that is contributing is also contributing towards the UIF. Only these two have been mentioned on Soli's salary slip. Only the pension fund and also the UIF. They've never said anything about the retirement fund, retirement annuity fund, and the donations. They never spoke about it. So now we can't be deducting what is not being mentioned on the pay slip. We only focus on what is being mentioned on the pay slip. So for example, we said Soli's gross income, it is 18,090 rands. And then now the non-taxable, if we can quickly go back to the non-taxable. Okay, this is the slide that I'm looking for. We said Soli's gross income, it is 18,090 rand. And then we said he's contributing how much towards a pension fund? Towards a pension fund, he's contributing 415 rand. And then also towards the UIF, he is contributing 180 rand and 90 cents. So now, if I am to continue there, we said the non-taxable deductions, it is the pension fund. We said how much is he contributing towards the pension fund? 415 rand. Plus, let me just put it inside the bracket, plus the UIF, how much is he contributing? 180 rand 90 cents. Remember, boys and girls, I'm just showing you, this is not part of the question. I am just showing you how to calculate that. if you are given a formula. And then now you continue, say now, what is the total for these two? If I add the ones inside the bracket, 18,090 rands minus the 595,90, and then let's see how much minus 18,090 rands. So now, so this taxable income, it will be 17,494 rand 10 cent. I'm just making an example just to show you how do you calculate the taxable income if you are given this information. Let's move on, boys and girls. We have now come to our tax rate tables. Remember, we did make mention of the tax rate tables to say now this tax rate tables, it is the one that we are using now to calculate the tax payable. So as you can see, this one, it is the one for the year 2020, 2021. Remember our tax year, when does it begins? It begins for this year one, it began on the 1st of March 2021, and then it ended on the 28th of Feb 2022. This is the period forward for our tax year. It starts on the 1st of March 2021. It ended on the 28th of February 2022. So for this year, for 2022, when we are to determine the period, it will be from the 1st of March 2022. It will end on the 28th of Feb 2023. So when we are to talk about the tax year for this one, it will be from the 2022. Then for this one, for this particular one that I've just done here, it will be 2022/2023. So it means we are covering from the 1st of March 2022 up until 28th February 2023. And then now, boys and girls, you can go through, as we go through this tax rate table, as we can see, we are given the taxable income. And this taxable income, we've got different tax brackets. From bracket number 1, it will be from 1 rand up until 216,200, and then it continues on as it will be our tax bracket number 1, 2, 3, 4, 5, 6, and 7. And each and every single tax bracket, it goes with the rates of tax in rands. As you can see, it says the person who earns between 1 rand and 216,200, they get to pay 18% of taxable income, and so on. So boys and girls, go through this. I know you have gone through, your teacher has been showing you examples, has been giving you questions based on this tax rate table. But as we continue now on the next question, you will see how do we make use of this tax rate table to determine what, to calculate the tax payable by an employee towards what, towards SARS. Let's take a 2-minute break so that we continue with our lesson.
grade 12 learners, welcome back. I will be co-presenting with my colleague, Mem Gia. I hope you guys are enjoying the lesson so far and you've learned as much as possible. So I am going to continue from where Mem has left off. Today's topic is a very interesting section, guys. It's the section of taxation, which with a special focus on income tax. Mem has already done all the terminologies, all the principles that you have to know as far as income tax is concerned. What you guys need to know is that the principles, when it comes to income tax, they are the same. It doesn't matter. You follow the same principle. Principle number one, you need to make sure that the taxable income that you are working with is in an annual format. When it comes to income tax, we only work with annual amounts. And then secondly, once you've determined your taxable income, then you go into your tax bracket. Like Mem has said that this section here, this column, we call this our tax brackets. And then we label them. This becomes your tax bracket 1, 2, 3, 4, 5, 6, and 7. So from the annual taxable income that would be having, then you can then choose where to place your taxpayer, whether they fall under bracket 1, under bracket 2, under bracket 3. So let's put that into practice now. Here is a question. They're saying, into which tax bracket does a person who earns 329,456 per year fall? So most importantly, the first thing is that our amount is per year. So we are happy. Now let's go to our tax bracket and check 329,456. It falls under which bracket? I know you've already done this. It falls under the second bracket. So the correct answer for this one would be bracket number 2. So for this type of questions, guys, it is examinable. So in the exam, when you have to calculate tax for identifying the correct bracket, you've got 1 mark that is waiting for you already in your final exams. And then the next question, into which tax bracket does a person who earns 12,500, it was actually supposed to be per month here, not per year. Into which tax bracket does a person who earns 12,500 per year per month fall? First of all, remember we said with income tax, our amounts must always be in annual formats. So before we can determine the tax bracket, we must first take the 12,500, and then we must multiply it by 12 months because we want to convert it to the annual format or to a yearly payment. So that is when now you take your calculator and then you'll say 12,500, multiply that by 12 months, and then we get 150,000. So this 150,000, it is the annual amount. And now that we've got the annual amount, we are happy. Let's go and check our tax brackets now. Where does 150,000 fall under? By the look of things, it falls under the first bracket because 150,000 is less than 216,200. So the correct answer here, therefore we say the correct answer here would be bracket number 1. So it will be bracket 1. That is the correct answer. And then we've got the tax rebates. In taxation, when we talk about the tax rebates, we are talking about a special discount that is given to all the taxpayers. So anyone that contributes towards income tax qualifies to receive a tax rebate. So in the exam, if you were asked what is the tax rebate, you will say it is a special discount that is given to all the taxpayers. Now, we've got 3 types of rebates, guys. We've got a primary rebate. The primary rebate is received by everyone that is contributing towards tax. This one is for everyone, including the people that are below the age of 65. So if you were to calculate my tax, a person of my age, once you've calculated my tax, you will then, because now we are in 2022, I will then qualify for a rebate of 15,740 14. But if you are calculating my income tax for the previous year, 2021, my rebate was going to be 14,958. And then the second type of rebate that we have is a secondary rebate. Now, secondary rebate is also a special type of a rebate, but this one is not for everyone. This one is for people that are between the ages of 65 and 74. So if maybe let's say you were calculating tax in 2022 for someone that was 68 years old, then that person will qualify for two rebates. They will qualify for the primary rebate. They will also qualify for the secondary rebate because their age group, they are within the age group of the secondary rebate. And then the third type of rebate is your tertiary rebate. The tertiary rebate, again, is not for everyone. It is only for people that are 75 years old and above. So if maybe you are calculating a tax for an individual that is 78 years old, it means that individual will get three rebates. They will get a primary rebate, they will get a secondary rebate, and lastly, they will get a tertiary rebate because of their age. So if you were to be asked in the exam, how many rebates are we having? We've got three types of rebates. They are a primary rebate, which is for people is for everyone that pays tax. And then we've got a secondary rebate. This one is specifically for people that are between the ages of 65 and 74. And then lastly, we've got tertiary rebate. This one, it is specifically for people that are 75 years and older. So here is a practical example on how to work with the rebates. So the question is, what tax rebate will a 45-year-old person receive for the 2022 tax year? So this rebate of ours, it represents 2 years. We've got the rebates for 2021, we've got rebates for 2022. But our question here is specific. They're asking about the 2022 tax year. So our taxpayer here is 45 years old. So if a person is 45 years old, they will qualify for which tax rebate? That is correct. They will qualify for a primary rebate. So how much rebate will they get? Then it means they will get a rebate of how much? Of 15,714, because the person is 45 years old, therefore they qualify for a primary rebate. And then B, what tax rebate will a 78-year-old person receive for the 2021 tax year? Now, this one is different because now the age of the person is 78. A 78-year-old person, they fall on the age group of 75 and older, meaning this particular taxpayer, they qualify for 3 rebates. They qualify for the first one. Now, the main thing again here, we are now looking at the 2021 tax year, no longer 2022. So they will qualify for the primary, they will qualify for the secondary, and then lastly, they will also qualify for a tertiary rebate. So let's identify the amounts. The primary rebate is how much? It is 14,958. Remember, it's for the 2021, not 2022. And then the secondary rebate, it is 8,122, plus the tertiary rebate, it is 2,736. And then let's add all the 3 rebates. I know you also have your calculators because you cannot attend a maths lit class without your calculator, guys. Plus 2,736. I'm getting the total amount of 25,816. This is the total rebate that an individual will receive if they were 78 years old. So you see the difference between a younger person and an older person. So the older you get, the more discount you are going to pay. Whereas the younger you are, the less discount you are going to get. And now, a tax threshold. when we talk about tax threshold, this has been asked in a lot of papers now. A tax threshold, it is that system that determines if a person should be paying tax or not. Remember, a person can be employed working full-time, but it doesn't mean that just because you are working, therefore you are liable to pay tax. There are so many factors that determines whether a person qualifies to pay tax or not. One, the most important thing, it depends on how much you are earning. Because if you are earning too little, when we calculate your tax, you might end up finding that after doing all the calculations, it gives us zero, meaning that it tells us that the money that you must pay for tax is zero. Or sometimes the money that you are earning is so little that when you calculate your tax, it actually gives us a negative answer. So when you get a negative answer, when you get zero, it tells you that this person is not supposed to be paying tax. So to avoid that futile exercise of calculating and get a zero, we use our threshold to guide us. So I'm going to repeat: a tax threshold. It is the system that determines whether a person should be paying tax or not. So if and with the tax threshold, again, we work with the taxable income, and the taxable income must be in an annual format. So if the taxable income is higher than the tax threshold, then that person must pay tax. Let's look at the 2022 column. For example, in 2022, and again, the threshold, like the rebates, it also depends on the age of the person. So if you are under 65, and then you are earning less than 87,300, the threshold amount is 87,300 per annum. So if your annual income is less than 87,300, it means you cannot be paying tax. You won't afford it. If you calculate your tax, it will be 0, 0, or it will be negative. But if your annual taxable income is more than 87,300, even if it can be 87,301, then it means you should be paying tax. You qualify to start paying tax. I don't know if that makes sense, guys. If you were between the ages of 65 and 74, and your annual taxable income was less than 135,150, it means you will not be liable to pay tax. You don't qualify to pay tax. But if you were between the ages of 65 and 74, and then you earn more than 135,150, therefore you can afford to pay tax. You qualify to pay tax. So that is the main use, that is the main purpose of the threshold. It tells us, it guides us if a person should be paying tax or not, depending on how much they are earning and also depending on the age of the person. So the amount of tax that you're going to pay, it depends on two things: how much you earn and your age as well. Those are the two most important factors. We also have other factors like your non-taxable deductions, but the most ones, the key ones, it is how much you are earning and your age as a taxpayer. Those will determine whether you qualify to pay tax or you don't. Now, here is another practical example when it comes to the thresholds. How old do you have to be to qualify for the 128,650 threshold for the 2022 tax year? So 128,650, it is over here. It's not on 2022, it is in 2021. So this 2022 here, we can fix it. It's not a train smash. We're just going to fix it and say this is 2021. Let's rephrase our question. How old do you have to be to qualify for the 128,650 tax threshold for the 2021 tax year? So here is the amount. Let's look at the age. It means you need to be between the ages of 65 and 74. So therefore the answer is between the ages of 65 and 74. That is how old you have to be for you to be to qualify for the 128,650 tax threshold. These are just the basic questions. This is the introduction. This type of questions, you can actually find them in your question 1. When you sit for your paper 1, first week of November, you can expect such questions on your question 1, paper 1. Now, we also have medical tax credits. What are medical tax credits? Medical tax credits, they work the same way as the tax rebates. Remember, what are the tax rebates? It is a discount that is given to the taxpayers. With the medical tax credits, it is also a discount that is given to the taxpayers, but not all the taxpayers. Only the taxpayers that are paying medical aid. It means for you to qualify for this special credit, for you to qualify for this special discount, you must be a member of a medical aid. So in actual fact, yeah, if you are working and you are paying medical aid, it means the amount of tax that you are going to pay is going to be lesser than the amount of money that is paid by somebody that is not on medical aid. Because when the calculations are done, you are going to get more discount because you are a medical aid member. So for us to determine how much discount a person should get when they are on medical aid, we have a table that is guiding us. It is a medical aid tax credit table. What you must note is that this table is always in a monthly format. And then we always emphasize that when it comes to taxation, we always work with annual formats. All our amounts must be in annual format. So before you do any calculations, you can just extend your table and say, okay, here it will be for 12 months. Remember, this column is for 1 month. So this section can be for 12 months. And then if you want, you can convert this 310 and then you say times 12 equals to, then you know all your amounts are in annual formats. You don't have to struggle. 310 multiplied by 12, it gives you 3,720. Then you can do the same with all these other values so that when you do your calculations, you know that you don't have to worry about converting to annual because you've already done that for yourself. But please, girls and boys, very, very important. Your brothers and sisters, they made a lot of these mistakes in the past year. When they calculate the medical tax credit, they always forget to multiply by 12. So always remember to multiply by 12. So how does the medical aid tax credit table work? Let's say myself, I'm Mem Zulu. I have 2 children and a husband. So it's a family of how many people? 4 people. And I've covered myself, including my entire family, in a medical aid. So it means I'm paying medical aid for how many people? 4 people. I am also included in those 4 people. So the medical aid is for 4 people. If you were to calculate my annual medical aid credit, how would you calculate it? You will say, okay, to calculate MEM's credit, MEM, I'm the main member. I'm the taxpayer. So my credit is 310 plus the first dependent. In this case, it's my husband. Guys, and again, first dependent does not always mean that it's a husband. First dependent, it can even be a child. It can be your first child, can be your second child. First dependent is anyone that is on the medical aid after myself as the main member. So another 310 plus the first child is 209 plus another child which is 209. So you are going to add all the 4 amounts. It's 310 plus 310 plus 209 plus 209. Guys, I hope you are also adding on your side then so we can compare our solutions, because remember, I'm bound to make mistakes. I hope you guys will be able to correct me then. So monthly, it is 1,038. That is the credit that she will receive per month for the family. But because we want it in the annual format, we are going to say this multiplied by 12 months. Every time when you convert to an annual format, you'll always multiply by 12. So that multiplied by 12, the answer is 12,000 456. So this, it is the total discount that you will give me when you calculate my tax. At the end of your calculations, once you subtract the rebates, you will also subtract my medical aid credit. In this case, is 12,456. So this is how you work with the medical aid tax credit table. Now, let's do a very, very practical exercise now. We are done with examples. Now we are coming to the real deal. We've got Marius, who is 66 years old. You get this question in question 2 or question 4 or question 5 in your paper 1. You highlight the age of the person. Very important. Marius, who is 66 years old and an annual taxable income. Very important, this one again. They said annual, you say yes. It means you don't have to multiply anything by 12. Taxable income, yes. It means you don't have to subtract anything. All the work has been done for you. Annual taxable income of 551,762 for the 2021-2022 tax year. The table alongside shows the tax table for the 2021-2022 tax year. This is our table. So this is the information that is given to us. So from the same table, we must calculate his annual tax payable for the 2021-2022 tax year. Again, let's check. He's earning a taxable income of 551,762. So from this taxable income, we go straight to our table here. Because they said it's taxable income and it's annual. So we work with it as it is. Let's go and check under which tax bracket are we going to put Marius. So 551 for me, it falls here between 4 and 6. Meaning that we'll be working with bracket number 1, 2, 3, 4. So we will be working with bracket number 4. So I'm going to write it down here that we are working with bracket number 4. And then what is our annual amount? Is 551,762. So what we do, we go to our bracket 4. It's 1, 2, 3, 4. And then we are going to rewrite this formula. Even in the exam, guys, you do that. You rewrite the formula because for identifying the correct tax bracket, rewriting it, you get a mark for that. So I'm going to write it down. Is 110,739 plus 36% of what is our taxable income. It is 551,762 minus how much? Minus this 467,500. Then we close our bracket. So for showing this step, you have a mark that is already waiting for you in the exam. So guys, I'm first going to simplify inside the bracket. 739 plus 36%, guys. You can write it as 0.36. You can write it as 36 over 100. It is up to you. Do what you are comfortable with. And in MathsLit, when you talk of the word of, this means what? It means multiply. Let me get now my answer in the bracket. 551,762 minus, just a minute, minus 467,500. I'm getting 84,262. If you want to punch it in as it is on your calculator, you are more than welcome to do so because your calculator knows BODMAS. It will perform BODMAS. So I'm simplifying now, multiply by 0.36 plus 110,739. Guys, very important. Remember the principle of BODMAS. You cannot say this plus 0.36. No, you must first multiply, then you can add the final answer. But if you just punch in everything as it is on your calculator will do BODMAS for you, and then it will give you the correct answer. So the answer, the final answer that I'm getting here is 141,073.32 cents. But remember, this is just the amount of tax that this person will pay. So we must still subtract what? We must still take out the rebates, the tax rebates. So let's move over to the next slide, guys. I hope you will write this down, the 141,073. Let's take it over to the next slide, guys. We said our tax amount, the tax was how much? It was 141,073.32. But we know when you calculate tax, we must also say minus what? Minus the rebates. Guys, remember, how old was this person? This person was 66 years old. So a person that is 66 years old, they qualify for how many rebates? Very good. They qualify for 2 rebates. They qualify for a primary rebate. They also qualify for a secondary rebate. So now let me do this properly now. To say the tax equals to 141,073.32 minus the first rebate is how much? It is 15,714 minus the secondary rebate is how much? It is 8,613, because the older you are, the more rebates you are going to get. So this minus 15,714 minus 8,613. The answer that we are getting now is how much? It is 116,746 and 32 cents. So this is the annual amount of tax that Marius is going to pay at the end of a tax year, because the question just said the annual tax. If they had said monthly tax, then you're going to take the final answer and divide it by 12 to get your monthly tax. But because now they just said annual, then we are just going to leave it here. Guys, let's do the last example quickly. So the second example, it's also an exercise. They say Tato, who is 44 years old, has an annual taxable income of 364,321 per year. He contributes towards a medical aid for himself and his wife. Determine Tato's annual tax amount that is payable. Again, here you highlight the most important things. The age of the person, he is 44 years old, and then there's an annual taxable income. They've already done the work for you. It is 364,000. So this Tato person, he pays medical aid for himself and his wife, meaning that he pays medical aid for how many people? For 2 people. So now let's go to our tax rate table and identify the correct tax bracket. So the 364,321, let us check the correct tax bracket. It falls under which bracket, guys? By the look of things, for me, 364, it falls between this and 337. It is less than 337, meaning that we'll be working with bracket number 2. So I'll write it down here to say this is bracket number 2. And what is the formula for bracket number 2? It is 38,916 plus 26% of our taxable income. What is our taxable income? It is 364,321 minus 216,200. So we put that in the formula. Now let's simplify. I'm going to simplify it the same way I simplified the first one. 38,916 plus 26%. I'm going to write it as 0.26. I know the meaning of in Mathslit means multiply. So let's determine the answer inside the bracket. It is 364,321 minus 216 200. The answer that I'm getting, it is 148,121. And then once you've substituted this, then you can continue with your simplification. I'm going to say that 148,121 multiplied by 0.26 equals to the answer plus 38,916 to give me the answer of 77,427 and 46 cents. So this is the tax that this person must pay. Remember, he is 44 years old and he's also paying medical aid for 2 people, meaning we must subtract what? We must subtract the rebate. We must also subtract what? Medical aid. But then where is the medical aid table? Where is the tax rebate table? Let's see that on the next slide. First of all, I'm going to write down the tax payable that we've calculated already that side. We said that the tax payable was 77,427 and 46. That is the tax amount that is payable. So from this tax amount that is payable, this person is paying for medical aid. So let's calculate his medical aid. For his medical aid, he's paying for himself. For himself, how much will he get? Is 310. Plus for his wife, how much is the credit for his wife is 310. So 310 plus 310, it is 620. So 620, you multiply that by 12. We say 620. You always have your calculator with you guys. You cannot go anywhere without your calculator. It is 7,440. And then, so now we are going to say from here, we will say 77,427 and 46 minus. He's 44 years old. So what rebate does he qualify for? He qualifies for the primary rebate. And how much is the primary rebate? It is the 14,958 minus the medical aid. How much is the medical aid? It is 7,440. Now let's determine the annual tax that he must pay. It is 77,427,46 minus 14,958 minus 7,440. This is 440. And then it gives us an answer of how much? 55,029,46. Remember, don't be alarmed to say, "Yo, so much money." This is just per annum. This is the tax that is going to pay in an annual basis. If you wanted to know how much you'll pay per month, you'll just say the answer divided by 12. I'm getting 4,585. So that is the amount of money that he'll be paying monthly for tax if they wanted us to determine the monthly tax. But in this case, they wanted the annual tax. So we are going to leave it at 55,029,46 cents and 46 cents. Guys, when we talk about money, we don't say comma. Now I'm starting to sound like you guys. So it is 55,029 and 46 cents. We've got Mr. Zulu, who is a 68-year-old businessman. He is married with 3 grandchildren who are also covered by his medical aid. As a company director, Zulu earns a monthly income of 42,000. Don't be shocked. Remember, he's the director. So he earns a monthly income of 42,000 and donates the 2,500 every month to a local orphanage. The table alongside shows the individual income tax rates for the 2021 and 2022. Guys, the examiner can twist things around and ask you, what is the significance of Mr. Zulu making donations from his salary? Or what is the significance of companies making big donations towards the community outreach programs. The main reason why big companies opt to donate, or people like Mr. Zulu that are earning much, they opt to donate, is so that it lessens the amount of tax that they have to pay. Because if you are donating, it means before we can calculate your tax, we must first subtract that amount that you are donating. Then after subtracting that amount that you are donating, it means your taxable income becomes smaller, and then it means you could actually move to the upper tax bracket, meaning that the tax amount that you pay will be lesser than how much you would be paying if you did not make that particular donation. So the main purpose for people or companies to opt for donations, to donate, it is so that they can lessen the amount of tax that they have to pay. And then another question that the examiner can ask you guys, they can ask, what is the organization that is responsible for the collection of taxes in South Africa? The name of the organization is what? Is SARS. And what does SARS stand for? It stands for the South African Revenue Services. That is the organization that is responsible for the collection of all our taxes. And then they can even ask you, what is the SARS? What is that tax money? The tax money, what is it used for? Where does that money go? That money is used to run the country. It is used to build hospitals. It is used to build schools. It is used to hire and pay public servants. Your public servants are us, your teachers, your nurses, your social workers, people at the home affairs. So fixing roads, that is where the tax money is used. It basically used to run and operate the entire country. So without the SARS, the income tax contributions, then our country would be in shambles, because there wouldn't be any money to fund any governmental institutions or to even pay any of all these important public servants that we see on a daily basis. So yes, there is Mr. Zulu. So guys, let's see the question that we have in now. They didn't give us any taxable income. They didn't give us any clues. They just gave us information. So because they didn't give us the taxable income, they want us to determine the annual taxable income. Remember, we said for taxable income, to find your taxable income, we use the formula to say taxable income is equals to your gross minus your non-taxable deductions. And then what are our non-taxable deductions? Our non-taxable deductions are those deductions that before we can calculate an individual's tax, we must first subtract them. Like I said, in this case now we are working with a donation, that before we can even calculate the tax, we must first take out the donation, excuse the donation. We are not going to tax the donation because he's already giving it away. So his gross, it was how much? It was 42,000. And then we say minus the 2,500 for donations. And then we get how much? So we say 42,000 minus 2,500. The answer is 39,500. 39,500. So this is his taxable income, but it is the taxable income per month. The question wanted what? The taxable income per annum. So to get the annual one, we are going to take this and then we are going to multiply it by 12. So we take the 39,500 times it by 12. We get how much? 474,000. So the 474,000, this is the annual taxable income for Mr. Zulu. So if we are going to calculate his tax, this is the money that we are going to tax. Remember taxable income. What is taxable income? They can ask you that in the exam. Taxable income, it is that amount that we use to calculate tax. Or you can say it is the amount that has tax applied on it. The one that we tax is called what? Taxable income. Hence the word taxable. It means we must tax it. So the second question, calculate his annual tax that is payable. Guys, you must know the difference. There is taxable income, there is tax that is payable. So now that we've determined the taxable income, we can use that amount now to calculate the annual tax that was payable. And then we said our taxable income was how much again? Our taxable income, we calculated it in the previous page. It was 474,000. This is our taxable income. And then let's go to our table and identify the proper bracket, the relevant bracket for this amount of 474,000. Is it bracket 1? No. 2? No. 3? Yes, absolutely, because 474, okay, no. No, 3 is not. And then what about 4? Yes, absolutely. So bracket number 4 is the one, because 474 is more than 467. So we are saying we are going to work with bracket number 4. I'm going to rewrite the formula again to say this would be 110,739 plus 36% of our taxable income of 474,000 minus 467,500. So I'm going to break this down like I always do. If you feel like I'm moving too slow, guys, can just punch in everything on your calculator. It should give you the correct answer. 110,739 plus 36%. The meaning of means what? It means multiplying. Open the bracket. 474,000 minus 467,500. The answer that I'm getting 6,500. I hope I've used the correct text bracket there, girls and boys. If I made a mistake, the most important thing is the procedure, the principle. Follow the correct steps. So now let's simplify now. So the 6,500 multiplied by 0.36 plus 110,739. So the total amount of tax that would be paid is 113,079. But remember, this person, they say he earns a monthly income of that and that. And then let me see, did they say anything about the medical aid? They didn't say anything about the medical aid. So we calculated his annual tax. So, but before we can finalize the annual tax, there's still one outstanding issue. What is that issue? The issue of rebates. We must subtract his rebates. Remember, how old is he? How old is Mr. Zulu? They didn't give us the age, guys. Okay, let's say Mr. Zulu is 45 years old. Let's give him 45. He's 40. Let's say he's 78 to make this interesting. Let's say he's 79 years old. And then his tax from the previous slide, it was 113,079. Now we must determine his rebates. So he qualifies if he's 79 years old, it means he's in the tertiary rebate. But if he's in the tertiary rebate, you don't just subtract the tertiary. It means you start from the primary, secondary, tertiary. It's like your schooling. You can't just move from birth and then you go to secondary school or you go to tertiary, to varsity. No, you start with primary school, you complete it. Secondary school, you complete it, then tertiary. It means when you are older, you would have moved through all the 3 steps. That is the same case here. Because this person is older, they must move through primary, secondary, and then the last one, tertiary. So what is their rebate now? Their rebate would be 14,958 plus 8,199 plus 2,736. Now let's add all the rebates. 14,958 plus 8,199 plus 2,736. So we get a total of how much? Of 25,893. Remember, this is what? This is the rebate. So when you calculate now the total tax we will take the tax amount, which is 113,079, and then we'll subtract the rebate. And how much is our rebate? It is 25,890.93. Let's see how much will now this person be paying for tax. 079. It is 87,186. This is the total amount of money that this person will be paying for what? For their income tax for that particular year. Girls and boys, unfortunately, we have now come to the end of our section. I hope you guys have enjoyed this. Remember, this afternoon is not even about teaching. We are just revising, and from here on, guys, it is crunch time. Please make sure that you go to school every day. Whenever you are called for extra classes, do show up. We are still going to have our broadcasting lessons every afternoon for all the different subjects. And then for our maths lit, we'll see you guys again next week, Wednesday, as we revise another topic, as we are doing our final countdown towards our final exams. Have a great afternoon, guys. Until we meet again next week. Thank you so much.